Long live the USA. Joe Biden is winning. The USA is winning. And that's because of this chart over here. Look at this. This is the Truflation Index, an estimate of what the official inflation rate will be soon. So it looks at the same kind of basket. It looks at food and beverages, at housing, at transport, etc. It looks at the same kind of constituents. But instead of relying on, for example, polls of house owners, asking them, what do you think, can you rent your house out for, etc. Truflation instead looks at market data. It updates this data way quicker. And so with that index, we probably have a more accurate representation of what's actually going on. And this is very good for the US. This means less pressure for business, less pressure for individual households that can potentially save more. And why is this such a big win? It's a win because the rest of the world is not experiencing this. This is the Truflation for the UK. And the numbers are not that different for the rest of Europe. 13% still. And there are obviously political reasons behind this, geographical conflicts, the war with Ukraine, etc. Energy is becoming very expensive in Europe, and so the US can advance, relatively speaking. Now, why should we care about this? It's important because the dollar strength might go up. The dollar might get stronger, and this could in turn be bad for Bitcoin. This is a crypto channel, so we do look at Bitcoin. What we see here in blue is the dollar strength, so the DXY, and in green we see the Bitcoin price. And there seems to be some kind of an inverse correlation, right? It's not huge, but whenever the DXY tends to trend up, then Bitcoin tends to trend down, and vice versa. So if you expect the blue line to go up again, the dollar strength to go up, then Bitcoin should be going down. Now, I don't bet on this. There's always different approaches coming to different results. And here, the macroeconomics, the inflation rates, the potential change in the dollar strength suggest that Bitcoin might go down. But I like to rely on backtests. I like to rely on trading or on simulated trading of predefined rules. And if you have been following this channel for a while, you should know about these moving averages over here. These are not random moving averages. These are the best backtested moving averages. So the 124-day simple moving average for Bitcoin. So this is the line here in turquoise, and the 72 exponential moving average, 72-day. And what you want to do is you want to be betting on falling prices, or at least have less Bitcoin exposure whenever the price is below those moving averages, and whenever the price is above, you want to be betting on rising prices. And historically, this outperformed buying and holding Bitcoin by a lot. And because of that outperformance relative to buying and holding, and because this is currently bullish, right? The 124-day simple moving average is currently at roughly 27K. Because this is bullish, I bet on rising prices. There's so much information flowing around. There is traditional finance getting into Bitcoin. There are SEC lawsuits. There is the impact of inflation rates, of interest rates. There are all those different dynamics, and nobody can put them all perfectly together to a system that predicts the future to a degree. Instead of making the system too complex, very often the decision for buying and selling an asset is just psychological. Why are people getting into Bitcoin, or why are they selling? They're getting into it because there's a lot of attention. Maybe the media is talking about it. Maybe they see a new all-time high has been created. There's all the excitement, and so this builds up, and so this creates further and further positive momentum. And the same is true the other way around, right? Why does Bitcoin crash further and further? Why can it go down 70 or 80%? It's not necessarily because of fundamentals. The fundamental value of a Bitcoin is probably not fluctuating by 70 or 80%. Simply just people are getting scared. If you just bought your Bitcoin and you suddenly see it go down by 40% and you're not aware of how volatile Bitcoin can be, then you simply just sell, and then the trend simply just continues. It doesn't make sense necessarily to overcomplicate things. I think it's better to try to simply just find a fixed set of rules with very limited parameters. It's a limited model. It can't take everything into account, but at least you know that historically that set of rules worked completely independent of emotions. Because that's in the end the big enemy, right? It's emotions. Being too greedy when things are going up and being too fearful when things are going down. Right now, now it looks like momentum is on the side of Bitcoin. It's not yet the hour to trade altcoins. Bitcoin dominance is going up, so Bitcoin as a fraction of all of crypto is continuing to rise. And we don't have to take on the risk to try to pick the next Pepe. That can be very risky, even if sometimes you succeed. If you bet too much of your portfolio on moonshots like this, you can very quickly get burned. So feel free to check out those moving averages as well. Feel free to find your own indicator. Do your own backtests. If you've got an idea for a specific strategy, feel free to also share this. We've got a Telegram channel here, the Bitcoin Strategy channel. Simply join this and let's chat together. I hang around there regularly, so looking forward to see you there. Bye-bye.